Stocks at the Nigerian Stock Exchange opened today at two-week high after central bank sets new FX rules. Ecobank sees economic recovery on Nigeria's new FX policy regime, but says uncertainty persists. Plus, India's Export-Import Bank to issue a 176.3 million loan to Ivory Coast for public works initiatives. Hello and welcome to Business Incorporated live from Channels Television, Lagos, Nigeria. I'm Chimize Obi Iwago. Ecobank Group Research has released a note stating that Nigeria's naira will trade in the range of 280 and 250 to the United States dollar in the wake of the new foreign exchange market regime announced on Wednesday by the central bank. In a two-page report issued today, Ecobank says the naira devaluation will remove the pressure slightly on the naira that has traded around 60% at the street market above the official rate. The report, however, states that while Nigeria's new exchange rate system will put the country on the right path to recovery, uncertainties remain on pressures in the economy. Ecobank Group Research sees inflationary pressures in the short term, in addition to potential rise in fiscal spending and no room for monetary policy easing in the near future. The central bank is forecasting to raise policy rates by 100 basis points at the next meeting in July. And in the U.S., the Federal Reserve yesterday kept U.S. interest rates unchanged, and in its statement signaled it still planned 2 hikes this year, although a slowing economic growth path for 2016 and 2017 prompted a downgrade where the U.S. Central Bank lowered its economic growth forecast for 2016 to 2.0% growth from 2.2% and its outlook for 2017 to 2% from 2.1%. In a press conference after the meeting, Federal Reserve Chair Janet Yellen gave no clues as to when a rate hike could come.
Federal Open Market Committee maintained the target range for the federal funds rate at 1/4 to 1/2%. This accommodative policy should support further progress toward our statutory objectives of maximum employment and price stability. We do need to make sure that there's sufficient momentum. I don't know what the timetable is going to be to gain that assurance. Every meeting is live. There is no meeting that is off the table, that no meeting is out in terms of a possible rate increase. But we really need to look at the data, and I can't pre-specify a timetable, so I'm, not comfortable to say it's in the next meeting or two, but it could be. It's not impossible. It's not impossible that by July, for example, we would see data that led us to believe that we're in a perfectly fine course, and that data was an aberration, and other concerns would have passed.
Janet Yellen, U.S. Fed Chair. Now, at the Asian markets, the Nikkei has closed down 3% for the second time this week after another rise in the Japanese yen against the dollar threatened exporters' prospects. The benchmark Nikkei 225 index closed down 3.05%. The Bank of Japan boosted the yen, which has been gaining ground as a haven for nervous investors, further after it ended its meeting saying it would not add new stimulus. Continuing worries around the upcoming EU referendum in the UK are adding to general unease about the lack of economic growth. Comments by the Federal Reserve head, Janet Yellen, overnight sounded a warning over a possible British exit from the EU. And for markets in Europe, DWTV Channels TV financial correspondent Ulrich Bartz now joins me from the Frankfurt Stock Exchange. Good afternoon, Ulrich. Well, the Fed and the Bank of Japan are the main drivers in the markets today. Share prices are going down. What was so disappointing? What are you hearing in Frankfurt on the floor of the exchange?
I think what disappointed the people the most here was Janet Yellen's revision of economic growth forecasts. You just mentioned the exact numbers that she said, and this came as a surprise, and this sounded surprisingly negative. And the U.S., of course, being the world's leading economy still, it doesn't spell well for economic prospects for many other countries around the world as well. I think the fact that she mentioned the Brexit, also a slight negative, but not totally unexpected, that in light of the upcoming Brexit decision, the Fed should not be wanting to pour more oil into the fire. And the fact that a rate hike today was not a negative nor a positive, but I think the economic forecast question is the main driver for the markets moving downwards here. Add a little bit into that the lack of new stimulus from the Bank of Japan, also a factor today.
Now the question is, Ulrich, when will the Fed be ready to raise rates? Could July be in the cards?
Yeah, basically Janet Yellen left the door wide open for the rest of the year, wide open to walk through it, but wide open also to stay behind it and watch what's happening behind the door. And that's what's frustrating to people here. They would have, I think, wished for more guidance on what the Fed is thinking and what the Fed plans to do. And they haven't seen a lot of determined action or determined guidance from the Fed in the past few months. There was criticism already, and now there's more criticism of that. July is probably, well, it could be a rate hike there if there is no Brexit, but people here are in extreme doubt of the further path. I think that insecurity is also contributing to this atmosphere of unease here in the markets.
Now moving over to some corporate news, Volkswagen Chief Executive Matthias Müller explained today what the company sees as its strategy until 2025. Tell us more on that.
Yeah, the strategy until 2025 is to become a major player in the market for new mobile concepts, new mobility concepts, electrical cars, self-driving cars, robot taxis, or car-sharing concepts. And Matthias Müller plans to invest double-digit billions in the next few years to achieve that goal. He also plans to have battery technology become a core technology, a core competence in the whole Volkswagen Group. And he hopes to, that will cost a lot of money, those double-digit billions. He hopes to be able to finance a part of that additional burden by making the company more efficient, more productive. A high hurdle, because the workers' representatives here in Germany have a big say in how much is produced here in Germany, at what locations, at what costs, with what interconnections between the factories. And it will be a challenge for Volkswagen to really move ahead in this area, but it sounds very determined to do so. Matthias Müller speaks of selling 20 to 25% of all its vehicles in the year 20 to 25 in the region of battery-powered electrical cars.
Well, thank you very much for those updates, Ulrich. Do enjoy the rest of the day. Ulrich Burtz, DWTV, Channels TV financial correspondent. Well, past and present Unilever bosses have said the firm would be negatively impacted by Brexit. The company says economic uncertainty in the event of a UK vote to leave the EU would hit the consumer goods giant. Unilever was responding to questions about the future from employees and pensioners. Some UK bosses have previously said that Britain can be economically successful outside the European Union. Unilever said in a statement it would still operate and have facilities such as research laboratories in the UK after Brexit. But it added, however, that the company may be fundamentally different if the decision were taken to leave the EU. Meanwhile, an American industrialist, Gary Klesch, has come out in favor of the UK leaving the European Union, saying the country could enjoy explosive growth if it was no longer tied to Brussels. He said firms in the EU were hampered by too much cumbersome regulation. Mr. Klesch, who runs his own investment fund, Klesch & Co., specializes in turning around struggling companies. His intervention comes amid a series of large companies writing to staff in support of Britain staying in Europe. BT, Rolls-Royce, and today Unilever have all told staff the uncertainty engendered by Brexit could hurt investment and sales.